Welcome back to OpenLine. We are talking about the housing market. We're talking about mortgages, and a good conversation up here. I want to talk about FHA loans versus conventional loans. Like, what are they? Why is that important for people to know about that stuff?
FHA is a good, and John does a ton of his buyers, FHA buyers. In our market, FHA provides a platform for people to buy with a little bit of money down. An FHA loan requires 3.5% investment. So on a $100,000 home, that's $3,500. Not a lot of money in the grand scheme of things. But what comes along with an FHA loan is monthly mortgage insurance. I can't tell you how many calls I get weekly. If you've bought a home in the last 3, 4, 5, 6 years on an FHA loan and you live in Middle Tennessee, I will almost guarantee you I can refinance you on a conventional loan, get rid of your mortgage insurance, and save you a ton of money. Because FHA rates are low, but when you tack the mortgage insurance on top of it, that makes and obviously you're not getting any equity out of mortgage insurance. So
what is on a $200,000 house, Alden? How much is mortgage insurance, just in general?
It's $150 a month.
That you're just throwing away.
Mm-hmm. Is that the PMI? Is that what they call that? Right. PMI, mortgage insurance.
Yeah. Any loan that is under 80% loan to value is going to require some type of mortgage insurance. So FHA, obviously it's 3.5% down, you're at 96.5%, so you're going to have that monthly mortgage insurance. And let me tell you something else. On FHA loans now, mortgage insurance never goes away. There used to be a point where when you got under 78%,
right, your
mortgage insurance would drop off. As long as you have an FHA loan, I don't care if your house is worth $250,000 and you owe $20,000 on it, you're still paying mortgage insurance. So I encourage anybody that has an FHA loan that's over 3, 4, 5 years old, you have a prime opportunity to refinance that on a conventional loan.
A minute ago, you were talking about somebody, and I can't remember if this was on air or not, but who had a 6% loan, and they didn't realize it, and then they called you and you put them in something a lot lower, and they saved a bunch of money. So what's the percentage out there? If somebody has X% on their house, when do you think they should look into refinancing?
There are tens of thousands of people that have rates over 5.25%. I keep thinking that we finally refinanced all of them, and I get calls every day that they're 5.25%, 5.5%, 6%. The lady I was telling you about bought in 2008. Professional, her husband's professional. She broke her collarbone horseback riding and happened to be home and caught my segment, and she goes, she didn't know what her interest rate was. She went and dug her paperwork out and she saw it was 6%, and she couldn't believe it. She called, she had she had paid 7 years on a 30-year. I dropped her loan to 15 years, and her payment actually went down $50. Mm-hmm. So when you're getting up 6%, you drop your interest rate in half. Even in the 5s. I mean, when you got the opportunity to drop to a 20 or 15 and drop your interest rate in half, or drop it 2 points.
And the other big question is, does it have mortgage insurance on it?
Right.
It could be a 4.5 and be FHA and still be worth doing.
I remember, and I might sound old now, I remember when 5% was great. Like a few years ago, you were getting, it was a lot higher than 5%.
Right. And
I think I got a 5, and I was overjoyed.
Yeah.
But now you're saying you can do a lot better.
5% is no good, Ben.
Great. Well then the concern is, you refinance over and over, that can be bad. It can add costs and that kind of thing. I mean, what about those concerns?
Listen, you want to be prudent about refinancing. I mean, there are people that are professional refinancers. Every 2 years they're refinancing, whether it's to skip a couple payments or to get some escrow money back. But, you want to do what makes sense. And I think my biggest source of refinances are always cash out loans, because things happen in their lives, they've got equity, and whether you want to pay off debt, whether you want to pay off student loans, whether you want to pay off or do home improvements to your home, cash out loans are good for the amount you can borrow the money at. I don't want to refinance. These days, you have to have a net tangible benefit to refinance. You have to be reducing your term, your interest rate, your payment. They won't let you refinance a 30 to a 30 and your payment go up $25 a month. There's not a net tangible benefit, and most investors are going to want to see the customer have a net tangible benefit to the refinance.
Well, that's fascinating. And all right, overall, the housing market. All right, we have Nashville, which is booming.
Right.
You're outside of Nashville as well.
Sure.
So what are
yeah.
you seeing outside?
Sure, and those markets are seeing a boom for what they are, which is not, and so what happened in the downturn is the core didn't take as big a hit, but the more rural you became, the tougher the housing downturn was. So the more the values went down, the slower they recovered. I do a lot in Trousdale and Smith County and some of those rural counties out there, and they're saying, for those guys, they're having a great market right now. But it was probably a year and a half, 2 years after Nashville started, so they were late to get started. But now they're really seeing, what's good for those guys. But it's not one of those situations where you go list a 150 and you're going to tell them to leave all weekend. You're going to list a 150 and probably sell it in the first 2 or 3 weeks or 30 days, or there's time for people to negotiate and that sort of thing. So it does vary. Yeah, and everything is such a micro market. What's the 3 rules of real estate? Location, okay. So it does vary like that, but no, not all of them are what we see in these really populated suburbs, so it does vary.
And let's say somebody wants to list their house. How are they going to best determine what it's actually worth?
Pulling comps is a science, and I teach it every day. I had a class today with my agents, and I'm like, guys, and going through and showing them how to pull comps when they're not on the MLS. Say you're an investor and you want to buy an investment property in Nashville. Well, all the deals that were bought in the neighborhood half the time aren't on the MLS, so you got to know how to go track those down. There are also rules where basement square footage is not calculated the same as square footage upstairs, so you really have to educate yourself, and you have to have a great agent to do it.
What about Zillow? Or one of those things where you go on there?
Zillow, what happened is the MLS and Zillow did not get along for a period of time, and so the information, Zillow was using their information and not compensating them for that, and so Zillow still is not back, doesn't have complete access to all of those. Zillow is a great resource, and I don't want to knock anything here, but at times, it did not have the exact access, so I'm constantly going out and meet somebody and they get a Zillow estimate, and that's just a program that's writing it. It's not the nuances of what's happened in the neighborhood. So a program's not going to tell you what the value is. You really do need to get a professional out there, and don't spend money on an appraiser initially unless there's really big questions, and those guys are fantastic, worth the money. But you can get a pretty good idea, and they'll call a couple agents, have them come out, pull comps in the neighborhood, talk to you about it, tell you how you met that number, and the best advice is listen to them. Sometimes it's not what you expected. It's not what you wanted,
want to hear.
What you want to hear, but the good agent is going to tell you what you don't want to hear. He's going to tell you the truth. So, and also, hey, I've been wrong. I'll go out and pull comps, and they say, I'm going to do 10. I'm like, okay, this is kind of a changing market, and boom, house sales. I'm like, okay, you don't know everything, smarty, So that happens too.
And you see people rolling the dice and just putting it out there for some outrageous amount, and then it sells.
Right.
Yeah.
Well,
and you see it the other way too.
You see it. You don't actually, and you'll hear it a lot of times. It really doesn't. They'll come out and say, I'm going to put this outrageous number. There's a science to it, and it really just doesn't happen that way.
All right, we have to take a break. Then we're going to come back. We'll give you your information and everything. Be back right after this.